Investments in securities are subject to market risks. Read all related documents carefully before investing. Hello and welcome to the Weekend Investing Daily Byte. We are shooting this episode on 14th of June, and the markets opened with a gap up but were languishing through the day, especially the broader market when it comes down to mid caps and small caps were bit sluggish today. Nevertheless, the Nifty closed at 18,747, another new high since December 22. So we are now sitting at a 18-month high, very near the all-time high, which is near 18,800. So we are within 0.5% of the all-time high, and the market run since April has been nothing short of what can be called a phenomenal run, given that there were all kinds of global recessionary headwind narrative that was going on. And in that scenario, as they say, the markets climbed on the wall of worries. And that always happens. The market always will surprise you, at least most of the people. And that is the true nature of the market, to surprise you at points where you think that you have you you are able to call the market will come and surprise you. So while now most of us are thinking that the market is cruising, maybe the market will surprise on the downside, we don't know. But in terms of continuation of momentum, until we find that significant momentum gets broken down, the chances are that we will continue to go up. This is the Nifty heat map for the day. You can see here we had a very strong uh, gains in steel sector. So JSW Steel, Tata Steel doing very well, cement stocks doing well, power stocks doing well, Reliance doing all right, Reliance Energy, ONGC, uh, in Hindustan Levers, Nestle, Tata Consumers doing quite well. Banks were a bit muted. So banks, IT, and autos. This was the segments which were a bit muted, banking and finance, and that was also evident in the bank Nifty going down actually today at minus 0.2%. Private banking stocks actually down 0.4%, with HDFC Bank. This merger with HDFC is coming up, and because many mutual funds, many institutions are holding both of them, uh, and the combined entity may be beyond what is their mandate to hold any one stock, and hence some sell off of that kind will also happen or is probably already happening. So that is a constraint in the HDFC group going up immediately. I think there is more selling to come, but it is getting absorbed because it is a very strong uh, franchise that everybody wants to get into. Metals, as you can see, on the day, 1.4% up. Commodities following at 1.1% up. Energy stocks, infra, PSEs, FMCGs, consumption stocks doing well. Reality a little slower today, but it has run up a lot in the last 1 month. Uh, so metals and real estate have done the best in the last 1 month. And over the last 3 months, you can say real estate, consumption stock, FMCG stocks, and metals have done the best. So the market is in fine fettle overall. Uh, a bit of slow moves in IT, pharma, and bank nifty, but other than that, most of it was doing all right. Mid caps, another new high, 34,833 is the uh, closing index, and we will get into a study today where we will try to see how long do each of these runs usually happen, and that will give us a sense of the idea how long we may continue to go up. Small caps also making new progress, more progress towards its all-time high, now very near this. But the rational sort of fear that one may have, and that is, I think, uh, reasonable fear, that after having run up in one go from 84 8500 to 10,334, there may be a 4 5% of a corrective move anytime. So that is, for instance, this was the move, and then you had a corrective move, then you had another move up to a new high, but then it gave it back, some of it in the next 4 months. So that kind of a move can come, but my sense is that it won't come before we hit the new previous high. And once we do that, maybe we will have a down move to retest this breakout. But that is just my speculation. Bank Nifty, it's been a month. It has not been able to really convincingly break out uh, above its previous peak. We are still hanging there, possibly waiting for other parts of the market to catch up, and then maybe the Bank Nifty will lead again. So until Bank Nifty starts to lead the market, I don't think we are going too far without Bank Nifty. So Bank Nifty right now is sulking. It's been a month at 44,000, but it's maybe good digestion for all the gains also. Stock of the day, fertilizer and chemicals. Uh, Stock has been running up like crazy very, very recently. Today there was some cabinet meet for some fertilizer subsidy, and people seem to have got a whiff of that ahead of the meeting. uh, and that is how we saw a 14-15% of jump here. This looks like going much, much higher, but then again, every time a stock goes up, uh, you and it goes much beyond its previous highs, we feel that it has gone too high. But then that is how multi-baggers take place, and you need to ride the winner, of course, having an exit plan in place. So this today's topic of how long can the bull run continues is inspired by Zafar Bhai's tweet yesterday. So thank you, Zafar, for providing this context. He gave a very nice chart of how small cap bull runs have happened from peak to peak, and we are extending this study towards mid cap, large cap, and small caps. Of course, the inference that Zafar reached of about 1,000 days is very, very, very much valid, and we hope that it plays out that way. So, Nifty, if we see in the last 2 decades, we've had four such segments where we ran up for 1,000 to 1,700 uh, days, and then the fall comes in much lesser time. So this took 1,400 days to go from 2,000 to 6,000, and then possibly 200 days to come back to 2,200 again. Uh, so the rises will always be slow and gradual, whereas the falls will always be steep and sort of spectacular. So as they say, you go up on a staircase, but you come down in an escalator uh, or an elevator in the markets. This is what we see usually, that from peak to peak, uh, it does take 1,000, 1,500, 1,700 days. So, which is almost like 3 years plus kind of period, 3 to 5 years. So, whenever we will have a sort of a major move in the market, it will be spanning over a long period of time. That is what history is telling us. And the falls, at least so far in the last five occasions that we have seen in the last 2 decades, has ranged between 20%, 23%, and 65%. So if a market is falling 20-30% after going up significantly over 1,000-1,500 days, then you can say that that is almost like natural for the market to behave like that. There should be no surprise. So in this last move since COVID previous peak, and we can debate whether this October 21 was the peak, or we are going to make a peak somewhere after 400 days. So even if you assume this to be the last sort of significant peak, and a minimum 1,000 days post that, so we will reach somewhere near 2024 in terms of trading days. And what we can also see here is that uh, we've not had sharp fall of this kind of nature of falls that we've seen before. So in some sense we are still seeking the peak, and then we will have some correction or a steeper fall at some point. That may be 2024, that may be 2025. It's very difficult to say, but nevertheless the current rally during this entire cycle has consolidated very well in the last year and a half, which is about 400 odd days. Uh, so that gives me a sense that maybe this particular rally has had like one jump and then consolidation, then another jump before we finally succumb to the cyclical lows that will come around. The Nifty 100 also has a similar picture. I think there is hardly any difference here. Mid caps, however, have had slightly different, you know, contours, where we had a good 22% fall here after this peak in October, and that if we see October 21 as the previous peak, then we have a very long way to run, even if the past data suggests that at least 700-800 days, and we have a long way to run before we will mature in this cycle. So mid caps actually are leading the entire rally. If you see all the charts of Nifty, Bank Nifty, small caps, mid caps, mid cap index is the one which is leading its previous high by a widest margin right now. Small caps are yet to reach a new peak, so you can say almost certainly here that small caps are just about starting on a new cycle, and that may take us to much later target of a peak. If the last so many examples are more than 1,000 days, then we are looking at somewhere in 2025, 2026 as the next peak. So usually what happens is that because we all have a tendency of having some anchoring bias, because we all have the same issues that a average human being has in terms of biases, and the only thing that we can do is to try and minimize those biases. So we've seen all these current prices, we've seen the rise from the recent 7,500 low on small caps, we've seen a 40% rise. It is very difficult to imagine that this rise could be, for instance, a rise like this rise, which was 3x, or from here if we went here, or from this rise. So this rise could take us to I don't know what levels, but it's difficult to imagine that. And because it is difficult to imagine where an index or a stock is going, your strategy needs to be such that you will continue to let your winners run. Because if you every day, every month, every year, if you're trying to predict the top, then that is not the way you can ever win this game. Because in some sense, you don't know how far your horse can run. Why would you want to cut short its journey? You would allow it to run as much as far as possible. Only when it is slowing down, it is not working, it is giving you negative returns, should you be, trying to switch from your existing investment. So the basic thesis needs to be right, and you should be invested. Or if you have a strategy where it alternates between investment and going to cash, then there has to be a way in which you are able to do this, without getting whimsical, or without having to toss a coin, because you need to remove that stress of the fact that am I doing right or am I doing wrong. Once you remove that stress from your decision making, you will find that investing becomes very, very easy. It becomes very, very smooth. You stop beating yourself up every day that I made a mistake or I'm regretting my decision, and you are relying on your proven methodical methods to make sure that you will always remain with the winning stocks in the market. And that's how momentum investing actually works. So go ahead and look at several of our momentum investing videos. If you have not seen that, there are momentum investing courses on our website. So it will teach you how to disassociate yourself from this daily decision making, from this getting attached to stocks, from trying to be the decider of how this should be running. Whereas if you create a system, you will see that you are actually not a party to that system at all now. You only need to just keep that engine running and just stand on the side. So this is how you can create a good outcome for yourself. The insights from this current charts that we saw was a duration between two peaks was an average of about 1100 days. Going by this logic, we probably have a long runway ahead. Uh, we may not be able to see it today. We may not be able to, fathom that we have a long runway, but maybe there is a good probability that it exists. And of course, it's important to stay invested for long, because markets can run up very, very hard in a short span of time. So even when this market is moving from one peak to the other, and we have a very sharp drawdown, even there in the rise also, you will see that there are few months of very uh, rapid spurts in the market, which if you miss in the decision making, whether I should invest, whether I should not invest, whether I should put 20%, whether I should put 80%, it becomes a mess actually. So stay invested, have a process, let your winners run, don't let your losers dig a grave for you, and you will be doing quite well in your investment thesis. So thank you so much for watching this. Do let us know if you have any comments about this content, and we'll see you in the next one. Thank you. Bye.